Energy editor over at Dow Jones. On bonds, Nasri Tatongi of Hartford Investment Management, but we're going to start with stocks. And Alec Young of Standard & Poor's. Alec, good morning to you.
Morning, guys.
Let's start short term here today. We make jokes about 13,000, but what is the next benchmark in your view?
Well, we've come a long way in the market. So short term, we're probably going to move on the earnings news. I think normally we might have seen a little bit of profit taking. We've had a good run, but the earnings news has been pretty good, and that's really kept us kind of flatlining after a lot of nice gains. So I think if the big components, Dow components you mentioned, report in line or better with good guidance, we could see similar kind of modest upward trend in the real short term.
We've had a lot of people in the past few days say the market's a little winded, a little tired. On the other hand, people like the Journal makes the point this morning that short interest is still strong enough that we still have a wall of worry to get us higher. How do those two balance out?
Yeah, well, normally when you have some of the big gains that we've had, you'll see some selling into the strength, and so far all we've seen after the big up days is kind of flat days, and that's very encouraging. I think it does reflect what you pointed out. A lot of skeptics out there, still a lot of cash that can come into the market. Unless we get some really negative fundamental news on either the earnings guidance front or on the economic data front, I think the trend is higher here.
And so far, nothing in the earnings that's really caused you to worry. I mean, some of the commentary out of some big components has been not stellar, but you're saying it's not strong enough to shake your confidence.
No, overall it's been very good, and the bar was set pretty high this quarter. We were looking for 14% earnings growth. So you got companies like IBM and Google coming out and beating already pretty high expectations. So overall, it's a good earnings season.
Talk to me about international, because I know you've done some research that shows the companies that are in favor now are still being valued on their exposure to the domestic economy, when in fact, obviously, I mean, it's something we all know, but I guess investors just aren't taking it to heart, right?
Yeah, our research indicates that 41% of the S&P 500 revenue is now coming from overseas. So investors need to start looking not just at the U.S. economy when they value U.S. stocks, but at the global economy. And on that basis, looking into 2007, we see much stronger growth in the global economy than we do in the U.S. The U.S. will slow. The rest of the world will stay pretty healthy as a result of continued good growth in places like China, India, Russia, above trend in Europe and Japan. That should be good for S&P 500 earnings growth and, a bullish indicator for 2007.
How good do you think for the S&P and the Dow? Do you still have targets for 2007? Have you updated those lately?
Yes, we have. We're kind of in the mid to high 1400s. So we're looking for basically a high single-digit percentage gain. You throw in dividends, another good, 9-10% year.
Okay, Alec.
Thank you.
You thought I wasn't joking.
On what, 13,000?
No. If I was saying 16,000, I'd be joking.